Hey, thanks for tuning in to Grow by Joe. I am so happy that you're watching this video because you want to grow and you want to grow beyond 10 million in revenue, 10 million in sales. That is so awesome because once you break that $10 million mark, then it just becomes sky's the limit. Then it's about getting to 20, then to 30, and then beyond. But the reality is, in order to grow to 10 million, and more importantly, beyond 10 million, is you're gonna need financing, you're gonna need capital. You're gonna have to work with non-bank lenders, and there's some amazing non-bank lenders out there that are almost very bank-like that you need to understand how to access those so you can grow and scale quickly but efficiently. I don't know if you know this, but I started my company, National Business Capital, in 2007 out of my spare bedroom, and I've grown my business without raising private equity, with borrowing money, so practicing what I've preached and grown to 100 employees, and more importantly, helping business owners just like you access over $2.5 billion for their businesses to grow and scale without raising equity. What's super important is you need to understand cash flow and money and how to use financing as a tool in your business to grow, and you're going to need those lending relationships. As you grow, at some point you may need some private equity. You should always be friends with the local regional business banks in your community. Those banks can be really supportive and super helpful with the growth, whether it's buying something locally real estate wise, or maybe a line of credit from the bank. So you want to always work those relationships. So first off, if you're growing your business, I don't know about you, but I've been in this place where I've grown my business and you're doing more sales, you're doing more revenue, you're hiring more people, and you're like, where's the money? Well, the reality is when businesses are growing fast, they usually need access to financing even more. They need access to capital more. Maybe you're doing jobs and you're laying out money and you're not getting paid for 30, 60, 90 days later. Well, if your business is like that, you really need to understand your cash flow cycles, and you're really going to need a lender to support those cash flow gaps. Because if you don't plug those gaps, then actually the more you grow, the more issues you're going to have in your business from a cash flow perspective. So the more that people understand the cash flow, the more business owners I work with that really get that, the faster and more efficient they can grow without these major cash flow dips and major issues in their business. I've met tons of entrepreneurs that have been in that exact situation. Great business, profitable, growing fast, but they're like, I don't have cash and I can't take on any more work. So there's two main things. What type of business are you? Are you a B2B business or a B2C business, meaning you're selling to direct to consumer? The challenge is the way banks and non-bank lenders will look at things, especially non-bank lenders that'll do big lines of credit. If you're selling B2B, then you can leverage those receivables to get a line of credit against them. So if you're selling your products to other businesses, companies, whatever it might be, you can leverage those receivables. If you have inventory, you can leverage that. If you've got real estate, which is obvious, or high value machinery, you can usually leverage that stuff to get an asset-based line of credit against it to grow and scale your business. As you book more of those receivables, that line of credit will expand with it, so you constantly have access to cash to pay for the salaries, the payroll, the materials, whatever it is that you need to pay for right now while you wait to get paid. If you do have B2B receivables and inventory, then there are a lot of really amazing non-bank lending options that are out there for you that you can leverage. And then sometimes those lenders, even though you have those assets, they really dive into the cash flow of your business and profitability. So if you've had some growing pains or challenges, some of them can look past it, or there are other options outside of that. So moving beyond an asset-based lender, so let's say you're selling to, like, hey, I sell direct to consumer, it's a product or a service, I don't have receivables, I don't hold inventory, I don't have any machinery or real estate, then there are amazing lenders that also look at your cash flow. They want to understand the cash flow of your business, they want to understand the opportunity, and they'll be able to do a line of credit or a term loan product purely based on the cash flow and the growth of your business. A lot of those lenders that are really good are very entrepreneurial. They'll want to talk with you, they'll want to understand the need, and they underwrite it just like an old school bank used to back in the day. And will give you a line of credit or a term loan type of product based on that conversation, based on what's going on in your business, based on the current cash flow. There are also mezzanine debt lenders. Now, with these lenders, they offer debt, but a lot of times there's equity kickers, there's could be warrants, There's also could be covenants. So you want to be careful with those lenders. There's a lot of other mezzanine debt alternatives today, like I just mentioned, term loans or line of credit that focus on cash flow, that don't take equity, that don't have covenants. So there are really good alternatives there that you definitely want to consider before you move forward with those deals. And then obviously there's private equity and venture debt. Now, there's a time and a place for private equity and venture debt. If your business has a lot of cash flow and a lot of revenue and a lot of sales, you can work with a non-bank lender and probably not have to give up equity in your business. With private equity and venture debt, they're going to take equity in your business. That's what they do. You may be in a business that has low sales, low revenue, but it's a great idea or a great software, a great SaaS product where private equity really does make sense. You may need a lot of money beyond what you're doing in sales today in order to build out tech where you're not going to have revenue coming in for a long time, so you won't be able to service debt. That's when you want to look at a private equity or venture debt deal. But if you have a business that's got cash flow going on, you're doing sales, growth, then you probably don't need the private equity. But if you've got cash flow and a good growing business, there should be multiple debt options that I know we could bring to the table. So a few tips before you go for financing is make sure you have your financials in order, in place. If you're going to go for a larger amount of money, 7 or 8 figures, you're going to need your financials in order. Make sure that your AR is cleaned up, your AR aging report and looks good. And then you want to make sure that you're really doing a good job of managing the cash flow of your business. Obviously, I know that's easier said than done sometimes. If you can pre-plan and get ahead of this stuff before you grow so fast that you put yourself in a bad position, it always makes sense to plan ahead for this stuff. But if you didn't, that's okay. But make sure that you have a process around getting your financials done. Make sure everything's in order and make sure you know them going into the conversations with lending and underwriting. You also need to understand when you're going to go apply for 7 or 8 figures in financing is lenders are going to ask questions. The larger the loan amount, usually the longer that it will take. So again, this is where you really want to plan for this stuff. Sometimes I see business owners get frustrated because lenders are asking questions. They have to do their due diligence. They don't want to make a bad decision. They don't want to give you money that puts you in a bad position. And they don't want to lose any money. So make sure that you're prepared and ready to answer those questions. Make sure that you're prepared to go through that process. A lot of times when you're going through this process, lenders are also paying attention to how quickly it takes you to get them things. So again, I can't stress enough, have your financials in order, have your AR and AP aging reports in order, go through them with your accounting prior to applying to make sure that you understand everything, making sure everything's cleaned up. All right, I hope this video helped you be better prepared and understand a little bit more the difference between banks and non-bank lenders. My company, National Business Capital, has been a leader in non-bank lending. Since 2007, we helped fund over $2.5 billion for business owners all across the country in all different industries. So if you got more questions, if I missed something in this video, if you need further clarification, get connected with my team and we'll be happy to help. Keep doing what you're doing, keep growing, stay focused, and remember, financing can be a tool for growth when used the right way and you understand how to use it and you understand what's going on in your business.